We begin with the major averages trying to string together 7 straight weeks of gains. Fed Chair Jay Powell adding fuel to the rally after Wednesday's meeting, of course. But stocks giving up some gains after New York Fed President John Williams seemed to walk things back a bit on CNBC earlier today.
We aren't really talking about rate cuts right now. We're very focused on the question in front of us, which, as Chair Powell said, the question is, have we gotten monetary policy to a sufficiently restrictive stance in order to ensure that inflation comes back down to 2%? That's the question in front of us. That's what we've been really thinking about for the past 5 months, and I think we'll be continuing to think about for some time.
Joining me now are Ben Kirby, co-head of investments at Thornburg Investment Management, and Chris Murphy, co-head of derivative strategy at Susquehanna. Welcome to you both. Ben, what do you make of Williams' comments this morning?
Hi, thanks for having me on the show. Look, I think if we're able to cut rates and avoid a recession, this current Fed administration is going to go down in history as one of the most successful Feds of all time. So let's see if we achieve it. But I think it would be a great outcome.
So why is he telling us not to think about that, or that they're not thinking about that yet?
Just because I think the other side, the left tail, is if we cut too soon and inflation reaccelerates, which is not a 0% risk, then we look a lot like the 1970s. And you go from being a hero as a Fed if you achieve a soft landing to being one of the worst Fed presidents over time if you reignite inflation on the other side.
Chris, I think it's telling the market action today where we started in the red after those comments, but we fought back into positive territory.
Yeah, I think so. I mean, there's enough chasing left into the end of the year. You don't want to be underinvested. And, what do we really expect him to say this morning? I think the market, obviously, judging by its reaction earlier this week, maybe got a little bit of ahead of himself. So, I would expect the next, Fed person to come in and try to tamp things down a little bit. So really not a surprise at all.
I should clarify, too, the Dow and the NASDAQ are positive. The S&P and the Russell are negative, for what it's worth. Chris, we're also heading into a big event in a couple hours' time on the market close. They say it's the biggest option expiration ever. Should I worry about that? Or what is that, an opportunity, a risk, a fact, a quirk? What?
I think it's more of a non-factor at this point. And the reason being is, we're really concerned. We think that the expiration has a big impact when the market stays kind of in the same spot like it did for the second half of November and the beginning of December, and a lot of open interest builds up right around where the market's actually trading. And that was kind of the talking point for a couple of weeks heading up into Powell a couple days ago. Now we've ripped much higher. So what you have is a situation where much of the open interest, all of the puts, most of the calls are below where we're trading right now. So they're just not having as much of an impact.
Oh, interesting. So because of this market move, maybe it's a little bit less consequential than it would have been otherwise. Chris, let me also ask you just about the vigor of the move we've seen. Whatever metrics you prefer to look at, I don't know if you're big on overbought or bull bear consensus or, put call ratios, whatever it is. Do you see signs that we're overextended, or do you see signs that after a move like this, you want to keep positioning and kind of give this rally some credit?
No, we're definitely seeing signs that we're overextended. With the options talk, we're really looking at the volatility priced into the upside compared to the downside. And that's hit some pretty extreme levels, especially in the small caps. And really, most other times we'd be, saying this is the time to pause. This is the time to reevaluate. But, how often do we go through one of the fastest hiking cycles of all time and then pivot? It's like that doesn't really, this is kind of a rare time. So some of those normal contraindicators that we will be, banging the table on, we're not really talking about as much right now because, as we know, the commentary out of the Fed and a pivot and things like that trumps everything.